Thank you, everyone, for coming out today, allowing me the opportunity to present Trevali Mining. I'll caution, there will be some forward-looking statements in my presentation today as well. Just a little high-level background on Trevali. So we are a zinc-focused base metal producer offering very strong cash flow generation. We are a global top 10 zinc producer. From a zinc leverage perspective, about 85% of our revenue is zinc derived. The rest is from lead and silver byproduct. We've delivered 5 years of straight production increases. We're pretty proud of our track record, and we believe we're fairly well positioned given where zinc is from a fundamental perspective, given low inventories and ongoing supply constraints. We certainly think we're well positioned for that. A little bit about our operations. We are diversified in terms of the jurisdictions in which we operate. We have 4 operating zinc mines. Perkoa, which is our flagship mine, is located in Burkina Faso. Rosh Pinah is located in southern Africa, down in Namibia. Then we have our Caribou mine, which is located in New Brunswick in eastern Canada, and our Santander mine in Peru, which was our legacy mine, which we started the company on effectively back in 2008. We really have focused on a lot of organic growth initiatives in the company, really looking at the low-hanging fruit, where we can extract value and deliver that value to shareholders. Really looking at some of the advanced project pipeline, and I'll get into some of the details, specifically Rosh Pinah 2.0, which is a moniker we give an expansion initiative we're currently studying at our Rosh Pinah mine. Our Bathurst Mining Camp operations, where we're looking at leveraging the current processing infrastructure we have at the Caribou mill with some of the other deposits that we own in the camp. At our Santander mine, there's the historic operation, the Santander pipe. We've been aggressively drilling that, and we'll be putting out some updated reserve resource figures later this quarter that will encapsulate some of that material as well. And then some of the regional exploration that we're undertaking at our Perkoa project, where it's effectively an unexplored VMS camp in central Burkina Faso. From an execution and delivery perspective, we did achieve our 2018 guidance. We just put the numbers out last week. The company is sitting with a very strong balance sheet and liquidity, with very low debt leverage as well. And we do have a very strong business relationship with Glencore, who's really has been a cornerstone strategic shareholder and strategic partner of the company for a number of years now. We have implemented a normal course issuer bid or a share buyback, recognizing that we feel that the shares have been undervalued going through 2018 and heading into this year. And as of the end of last year, we purchased almost 13 million shares off the market under that NCIB. You can see what our geographic location of the 4 mines, and you can see where we're located, and our 2019 guidance. So we're on track to produce kind of up to about 400 million pounds again in 2019, just under 50 million pounds of lead, and between 1.3 to 1.4 million ounces of payable silver byproduct as well. Really, the goal of the company in terms of some of the internal organic optimization initiatives is to look at how can we extract additional value from some of our operations. I won't go through or belabor all these points. Really, some of those organic initiatives, specifically at Rosh Pinah, is we are looking at a 50% increase in mill throughput. That study's underway, and that should be completed by mid-year, and that'll dictate the next step going forward there. At our Perkoa mine in Burkina Faso, we're just in the final stages of installing a new high-efficiency generator that will drop our operating costs at the Perkoa mine as well. And then looking more at district-scale exploration, both at the Bathurst Mining Camp and at Santander as well. Certainly, we see good opportunities there. And as I touched on, we have been active on our normal course issuer bid, and that program will continue through 2019 as well. Exploration is another aspect that we really think we can unlock a lot of value with the drill bit. A lot of our exploration this year will be focused on our 2 shortest life mines, specifically Perkoa and Santander. Those are the 2 where we think we can unlock. Our updated reserve resource numbers will be out by the end of this quarter, and we're hopeful that we'll be able to deliver increases on all those fronts, so stay tuned for those numbers. One of the nice things about having 4 operating mines as well is asset diversification in terms of being able to deliver on production. As I mentioned, we did achieve our 2018 guidance. We hit 407 million pounds of payable zinc in 2018. Despite having some challenges at a couple of our mines where we had to drop our guidance, the nice thing is one of our other mines, Perkoa, we upgraded our guidance twice, and that allowed us to achieve our goals for 2018. The company is in a very strong financial position. As of our latest financials, we're sitting with just under 100 million US in the treasury, very manageable debt position. Likewise, strong liquidity and working capital facility available for us as well. From a capital structure, you can see how it's broken down. We're currently sitting with just under a 300 million market cap, despite having a very strong cash position and very manageable debt. From a shareholder perspective, you can see Glencore's ownership at just over 25%, but we've cultivated a fairly strong institutional shareholder base as well, and you can see some of the names there. Just to touch on some of the assets at a high level, this is our Perkoa mine. We're located in central Burkina Faso. It's about a 2-hour drive west of Ouagadougou, the capital. It's been in operation for about 4 years now. We've owned it for about a year and a half. It is our flagship asset. It is producing about 40 to 45% of our corporate zinc, so a very prolific producer. And globally, it's one of the highest grade zinc mines in operation. Our average head grades in 2018 was about 15% zinc, so a very prolific producer. And you can see what the production numbers were. You can see the reserve and resource deck there as well. Rosh Pinah is the other mine that we acquired as part of the transaction where we purchased Glencore's African zinc production portfolio about a year and a half ago. It's located in southern Namibia. It's just across the Orange River from South Africa. This mine has actually been in production for 50 years now. Certainly we see a long pathway in front of it. It currently has a 12-year life of mine based on reserves, and we see a lot of upside going forward on this one, and that's what really instigated the studies to look at potentially increasing the throughput of Rosh Pinah by 50%. And as I mentioned, that technical study will be done by about mid-year, and that will dictate our pathway going forward, looking to unlock additional value by increasing output out of this mine. Moving off to eastern Canada, this is the Bathurst Mining Camp in northeastern New Brunswick, a very prolific producing area. Our cornerstone asset here is the Caribou mine. We've had 3 years of non-stop or successful production coming out of Caribou. Very proud of the track record that we've delivered on that asset. One of the things we're also looking at in the camp is looking at leveraging the infrastructure that we have in the Bathurst Mining Camp. So ultimately, as we move forward and exhaust the reserves and resources at Caribou, we're looking at some of the optionality with the other deposits that we own or control in the camp as well. So certainly we do see a pathway for additional production even beyond the life of Caribou mine here. So we look at it more of a life of mill rather than a life of mine, being able to leverage our infrastructure and our assets in the camp. And moving to our last mine, there again, our legacy mine that we started the company on back in 2008. This is Santander. This is about 200 kilometers northeast of Lima. It's up in the Andes. You can see a picture of the valley there where the infrastructure is located. It's up at about 5,500 meters elevation. This is a great little mine. It's now our smallest production profile, but it's a very profitable mine. It's our lowest cost operator, and it continues to just chug along and produce very reasonable amount of zinc production and lead silver byproduct as well. One of the things we're looking at here is expanding our exploration program to extend the current life of mine, which is currently 3 years based on the reserves. We're pretty confident that we will be able to replace what we mined in 2018 and certainly look to add to that as well as part of the exploration initiative. Touch a little bit maybe on zinc, just kind of on a macro fundamental perspective. Zinc globally is very tight. If you look at refined zinc, specifically in the LME and Shanghai warehouses, we're at a plus 10-year low. We're less than 1 week of global supply is sitting in that. Also from a concentrate perspective, concentrate being what the mining companies like us produce, it is a very, very tight environment out there. Certainly one would look at that and one would expect that should be supportive of higher zinc prices. We haven't seen them, unfortunately. Zinc prices have been kind of frustratingly low for the past year. I think you're seeing a lot of external influences, global trade wars, tariffs, kind of muted industrial growth from a GDP perspective. But just given the fundamentals, we should start to see a reaction in the zinc price. So certainly going forward, Trevali is well positioned. We think we're there, something to watch for. That's about it. If anybody has any other questions, I'm available at booth 430 as well. Please come by, and I'm happy to entertain any other questions. Thank you very much.